Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Once again, let's take a look at the British pound. So gold market, as you can see, still stands in a very tight range, so bringing nothing new to our analysis. It seems it has some lack of the driving factors and something needs to be on the market that could push gold market in one another direction. So all that we have currently is sufficient to send it in some significant action. Meantime, on the cable, as you can see, the performance that we discussed, possible scenario that we discussed recently, stands on the way. So we said we have the daily bullish stretch pattern, and scalp traders could think about taking long positions, since this is a combination of the oversold with the fib level 36, 31. And here some reaction has to happen, at least based on the probabilities. So market should show some reaction. At the same time, we're a bit skeptical on the reversal rate at this moment, because even technically, overall price behavior here stands a bit, downward action stands strong. And the things that we talked about on the euro currency stands here as well, so you can see that on the CD leg we have some acceleration. Besides, we're in a retracement from the long-term target, and the scale of this target suggests by itself that it should be a bit deeper retracement. For a perfect reaction and perfect technical picture on the daily chart, I would suggest it's reaching the OP here, it's 135.20 approximately, and completing on this A, B, C, D pattern right back down. That also creates the strong confidence support on the daily chart around 135. So this will be very, very good, just perfect area where we could consider taking the long position. That's what about the daily chart. Meantime, here we see some bounce, and the next week probably we should get the answer on the question whether we are correct on this suggestion of a possible deeper retracement. Because we said in a weekly report a couple of weeks ago that a retracement is good stuff, but in general, overall performance on the weekly chart stands strong, and market keeps chances to proceed high to the 147 even area, somewhere to these significantly high standing levels after retracement. And mostly this chance to proceed high depends on where market will turn up. That is what we intend to keep an eye on in the longer term. Meantime, with this upward action, it also could be the answer whether we are correct in our suggestion or not. Because currently we think that this will be just a pullback and then market should continue with downside action. On the follow time frame chart, this is actually the setup that we discussed. Market has completed the butterfly. Now we're showing upward bounce up from here, and here we're mostly watching for two levels. 138 approximately, 37.96 is first resistance, where market could reverse down again, and 38.75 confidence resistance, 65.75. So that's two major levels. So if we're correct that it's just a pullback and we should keep an eye on the 135 OP on the daily, then probably the market should turn down somewhere from these two levels. But if it starts climbing right back up to the 140 right here, that might be the first sign that market's preparing for upward continuation. Because take a look here, reverse head and shoulders pattern could be formed. And if market will proceed breaking all the confidence areas right to the 140, it means that overall context is changing and market is ready to proceed higher to form this pattern. That's what we intend to consider within the week probably. Today we have some near standing targets. So first of all, 30% level is the minimum target for the butterfly. Once market hits this level, it's treated as a completed butterfly. So it reaches minimum target. That is what we have here. On the intraday chart, recent reversal is taking the shape of the some kind of the double bottom pattern. Here was minor wash and rinse of this bottom, and market return at the cup here. It's typical for the double bottom type of action. With this double bottom, I have few targets as well. So the first one is target of the double bottom itself. As you know, it's equals to the depth of the double bottom counted from the neckline to the upside. And it leads us right back up to the 137.9 area. Another one, on the slope of the second bottom, we have the ABCD pattern with the XOP also standing right around 137.90. So all these targets agrees with the first fib resistance level and previous consolidation, the lower bottom. So if you have taken the position recently, long position, you need to make the decision what do you do with it around 137.90. Since market actually has chance to reverse down again from this level. So we can't exclude it totally. So that's what we think about the Great British Pound.